Nvidia is set to report fiscal first quarter 2026 results on May 28, 2025. The consensus earnings per share estimate is about 82 cents, a hefty 41% increase from roughly 58 cents in the year-ago quarter. This forecast reflects continued growth fueled by Nvidia's AI-driven data center business. For context, Nvidia's prior quarter delivered GAAP earnings per share of 89 cents on $39.33 billion in revenue. Management's own guidance for the first quarter of fiscal year 2026 is strong. CFO Colette Kress forecast revenue of about $43 billion, give or take 2%, well above the approximately $41.8 billion that analysts expected. In other words, both revenue and earnings per share are expected to grow substantially year over year, assuming Nvidia meets or exceeds these figures. Looking closer at the numbers, analysts from Zacks and Barchart report the 82 cents earnings per share estimate and note it has held steady in recent days. Some media report that this forecast was trimmed from roughly 87 cents just weeks earlier, a 6% cut as projections were reined in. In any case, consensus sees earnings per share well above last year's 58 cents. On the revenue side, investors will watch whether Nvidia matches or beats the $43 billion guidance. Analysts also note that gross margins may be under some pressure. Nvidia guided approximately 71% GAAP gross margin, with non-GAAP at about 71% for the quarter. This is slightly below the 72% Wall Street consensus. CFO Kress has said margins should recover in later quarters as chip costs fall. Analysts are broadly optimistic but watchful. Most expect Nvidia to beat estimates again. It has done so in every quarter for the last year. For example, the previous quarter's 85 cents EPS versus the consensus 79 cents was about a 7.6% beat. This string of beats has given Nvidia a reputation for outperformance. One analyst noted that Nvidia's results reaffirm that it continues to lead the AI landscape. On the other hand, estimate momentum has shown some caution. Data from Nasdaq via Zacks indicate the consensus EPS forecast has been flat in the past week at around 82 cents, but about 5 to 6% lower than a month ago. In other words, analysts slightly trimmed their outlook over April, possibly reflecting macroeconomic or supply chain concerns. Nonetheless, estimates remain far above year-ago levels. The visible alpha consensus shows the market expecting roughly 82 cents EPS, and estimates for full-year fiscal year 2026 are being raised. Analysts now expect 36% growth to $4.01 EPS for fiscal year 2026. One reason analysts watch earnings so closely is valuation. Nvidia's stock is trading at sky-high multiples, around 50 to 60 times forward earnings, so small forecast changes can have big price impacts. For example, Reuters noted in January 2025 that Nvidia hit 56 times earnings with its massive stock run-up. That same report noted Nvidia's shares had dropped about 12% year-to-date after spiking hundreds of percent the prior 2 years. In short, the bar is high. If Nvidia delivers better than expected results, it could power the stock higher. If it merely meets estimates or warns of slower growth, even a good quarter might not spark a rally. The broader market is similarly mixed on what to expect. Nvidia's stock performance has been volatile. It rallied hundreds of percent in 2023 to 2024, but recent news, like a Chinese competitor DeepSeek, triggered sell-offs. In late January, Nvidia lost around $593 billion in market value in one session, the largest one-day market cap drop ever for a U.S. company, amid an AI sell-off. That episode underscores how quickly sentiment can swing. More recently, NVDA has traded around the low to mid-100s, around $109 on April 30th, reflecting some profit-taking. With the stock near its recent lows, some investors feel it's cheap on a long-term basis, while others caution that expectations remain extremely high. Looking ahead, investors will parse both the headline numbers and management's tone. Analysts will check whether data center revenue, most of NVDA's business, met lofty forecasts and whether margins held up. Any hint of slowing demand could spook traders. Conversely, if Nvidia beats on EPS and revenue, especially if boosted by robust Blackwell sales or announced partnerships, it could trigger a short squeeze or renewed enthusiasm in AI stocks. Historically, Nvidia stock has had huge moves around earnings, so volatility is likely. For instance, after the last earnings report, Nvidia's stock barely budged, It even dipped about 1.5% in after-hours trading despite beating forecasts and raising guidance. That suggests investors may have already baked in many positives. Overall, the consensus story is strong growth ahead, but very high expectations. Analysts generally remain bullish on Nvidia's AI leadership. Many are projecting continued growth. Some forecasts see EPS rising to around $5 by fiscal year 2027. But the market's razor-thin mood means even a slight underperformance could cause a pullback, while an upside surprise may ignite a rally. In short, Nvidia's May 28th report will be a key moment, not just for its numbers, but for clues about how the broader AI chip boom will sustain the company's stratospheric valuation.